Google now faces a lawsuit from the US Department of Justice. On that day that it was announced, we should have been expecting the stock price of Google to crash, but this did not happen. The stock price gained 1.39%. What does all of this lawsuit mean? Does it mean that the government is going to break up Google? How does this affect the other tech companies, the other big tech companies such as Apple, Amazon, Facebook, and also Microsoft? Is the government going to break these companies too? Because it's important to talk about all of this. These 5 companies are today 22.5% of the S&P 500 and 45% of the Nasdaq 100. So if anything bad happens to one of these companies or to several of them, this is going to be bad for the whole market. That's why it is important to know what's happening to Google, what's happening to the big tech stocks. And like I said in a video earlier this week, it doesn't matter who wins the elections. Both parties are going after the big tech. This is something that we can be certain about. So that's why we need to talk about that. And that's why we need to smash the like button for the YouTube algorithm. If you are new to the channel, my name is Ishfaaq. I am a popular investor on eToro, where I manage assets for 225 people. So please subscribe and hit the notification bell so that you don't miss the coming videos. The US Department of Justice, along with 48 other state governments, have a lawsuit against Google that Google is a monopoly. Is it? If we look at the search engine business of Google, because this is the main business of Google, the search engine, it currently has 90% of market share in the United States. And in several countries all around the world, Google is the leader. Even though in the largest internet market in the world, China, Google is still banned, in other countries, in India, in Russia, in African countries, Google is still leading. And by the way, in Russia, a few years back, Google was not leading. There used to be Yandex, but now Google is number 1. We even have the word to Google, which is synonymous to looking for something on the internet. For many people, the internet is actually Google. When I was in Russia, actually, one of my friends used the word zaguglit, which in Russian means literally to Google. So I asked her whether they have a word for looking for something on Yandex. She told me no. So they have a word for Google, but they don't have a word for Yandex. So you see, Google now, for many people, is actually equal to the internet. And this may look like a monopoly. But Google is more than just a search engine. Google also owns Google Chrome, which is the most popular web browser in the world. Google also owns YouTube. You're using Google right now by watching this video. And YouTube is the second largest search engine in the world after Google and the number 1 video sharing service provider in the world. Maybe you might be watching this on an Android phone, again owned by Google. The fact that Google leads in so many industries in itself is not really a problem. Because you look at a company such as Berkshire Hathaway, they lead in energy, in railroads, in insurance. So it's not really a problem. But the problem with Google is that they don't just lead, they dominate. That's the problem. If you look at again at Berkshire Hathaway, it's not the only insurance company in the United States or even in the world. There are other companies. There is AIG, there are travelers insurance companies. About railroads, there are 4 main railroads in the United States. Only one of them is owned by Berkshire Hathaway. But when we look at Google, they are dominating everywhere. And these different industries where they're dominating are linked to each other. And there's a lot of collusion. This gives them some privileges that their competitors do not have. For example, if you have an Android phone, the default web browser will be the one made by Google, Google Chrome, or the Google app. You open the Google app, the default search engine is Google. So you see, they have privileges that Apple doesn't have. And this is where now one of the reasons why the DOJ is doing this inquiry, this lawsuit against Google, is because they are talking to competitors. For example, Apple. They paid Apple actually to make Google the default search engine on Safari, which is owned by Apple. And this is where there is a big problem. Because when you have a monopoly, yes, it's bad, but it takes time to actually find you guilty of anything. But when you can collude with competitors and when you are trying to corner the market, that is something very bad. Wall Street, however, seems not to be taking this news so badly because, like we said, the stock price gained 1.39% on that day. It's because they are expecting maybe the same thing that happened to Microsoft in 1998 to 2000, the same thing to happen again. At the time, there was a lawsuit against Microsoft, and the government did not break up Microsoft. So maybe Wall Street expect the same thing to happen to Google. It's just a lawsuit, but in the end, Google will still be here. Wall Street is looking at the bull case of what may happen. And in the bull case, Google is just going to pay a fine, a small fine, and then the government will tell them, don't talk to Apple anymore. This is the bull case. We will go back to normal. That's what Wall Street is betting on. In the base case, there will be a higher fine, maybe like the one they paid to the European Union, which was about 2.7 billion US dollars, or the one that Facebook paid to the FTC last year, 5 billion US dollars. It is not a problem for Google to pay such a huge fine. Even 10 billion US dollars, they will be able to pay it very easily. So that's why the base case scenario is something that the Wall Street is not very scared about. But Wall Street is ignoring the bear case. And in the bear case, actually the government is going to break up Google. It's not the first time that the government break up a company. It happened before. In 1911, the US government broke up John D. Rockefeller's company, Standard Oil. In 1934, the Glass-Steagall Act, it broke up many of the banks, including JP Morgan. That's why today we have JP Morgan Chase and Morgan Stanley, two different companies. And like we said with Standard Oil, we have ExxonMobil, we have British Petroleum, we have Chevron. All of these companies used to be one before that. And same thing in 1984, the US government broke up AT&T. For now, we don't know what will happen. Nobody can tell you for sure which of these scenarios is going to happen. Or maybe we are going to have another scenario which we are not looking at. Maybe Google will be nationalized. Who knows? Because if the government is printing so much money, who knows how far they are going to go. Maybe this can happen. But as investors, for now, we need to consider that this is not going to affect only Google, but the whole tech industry. Because if the government can go against Google, it is very easy to go against Google because the monopoly there is very obvious. You can see that Google is dominating the whole search engine market. But if they can go against Google, they can eventually go against Apple. They can go against Microsoft. They can go against Facebook. They can go against Amazon. This is just the beginning. And what happened to Microsoft in 1998? This lawsuit, it weakened Microsoft. Microsoft was in some way forced to make an investment in Apple. And Microsoft was not the same company after that lawsuit. And this is one of the main reasons why the dot-com bubble burst, that lawsuit against Microsoft. And when the dot-com bubble burst, it took 16 years for the stock of Microsoft to recover. Even in the bull case scenario, this can affect the stock price of Google. And if other companies are going to have antitrust lawsuits against them, it can affect their stock price too. And this is going to affect the whole market because like we said, the tech sector is the leading sector in the market right now. This is the locomotive of this stock market. We can see that there is a bubble. The spread between the New York Stock Exchange Composite and the Nasdaq Composite has never been so big. It is even bigger than it was in 2000 during the dot-com bubble. Some people will say that now these companies are making much more money than in 2000, so it makes sense that the spread should be bigger. I understand that it should be bigger, but not that big. You see the valuations on those companies. Amazon has a PE ratio of 120. Netflix has a PE ratio of over 200. Apple 35. You see the high valuations on these stocks. So that's why we need to be careful what will happen next to the stock market. If there is going to be more losses against these companies or even Google, if things turn bad, because we need to look at different scenarios. It's not sure that the base case or the bull case is going to happen. It is possible that the bear case happens. If not to Google, maybe to Amazon. And if this happens, the whole market will go down. And that's why I would prefer to stay away from these companies. I'm not telling you not to invest in stocks. There are several stocks which are very cheap right now. You need to invest in cheap stocks. These stocks are expensive. It's not because for the last 10 years that they have been going up that this will keep happening. For the last 10 years, there have been zero regulations on them. All regulations were focused on the banks. But now we are seeing a shift. It's no longer the banks which is the problem. It is the big tech companies that are the problem. If of course these stocks crash, it will be a good buying opportunity. Because if you bought Microsoft in 2003 or even 2008, it would have been a great investment. You would have made a fortune. So if things go bad, you need to look for opportunities. As for my investments, I have investments in Apple, which is about 3% of my portfolio. I have investment in Fitbit, which is going to be acquired by Google. For the time being, I'm going to hold on these companies. Fitbit is just an arbitrage trade. I don't think that there will be any problem with this deal. It's going to take longer than usual, but eventually I believe it's going to go through. As far as Apple is concerned, I bought this stock in 2016. I'm being paid a very good dividend on this. At the price that I bought, I don't think the stock is going to crash that much. I'm making over 400% profits on Apple. So for the time being, I will just hold on Apple. Of course, if I have the opportunity to buy more shares, I'm going to buy more shares. So let me know in the comments, what do you think about this lawsuit? Do you think that the government is going to break up Google? Thank you for watching this video. Please like, subscribe and share. Please watch these two videos if you have missed them. Have a nice day and goodbye.